Have you ever paused to think about your bank? Or does it just feel like this familiar, trusty, but perhaps somewhat unremarkable appliance in your house? Like your fridge, right? It's always there, it does its job, but you probably don't give it much thought beyond making sure it's working, right? Welcome back to the Banking Bros channel. My name's Jonah, and today we're gonna pull back the curtain on the often overlooked financial relationship between you and your bank. Because believe it or not, the bank you choose is far more just a place to park your money, right? It's actually a fundamental and sometimes super underappreciated partner in your financial journey. And if you select the right one, you can truly have a significant impact on your well-being. So, buckle up, because we're about to dive deep into the fascinating world of banking, exploring history. I'll talk about modern banks. Most importantly, in this video, I'm gonna help you figure out which one might be the absolute best fit for you and your unique financial goals. Now, before we jump straight into comparing different banks, comparing their features, let's actually take a fascinating, I think, trip back in time. The very concept of banking as a way to store money, lend money, and manage money. It's not new. It's actually far from new. Its roots stretch back through millennia, literally. So imagine ancient Mesopotamia. People actually would store their most valuable assets. Now, typically it wasn't money, it was grain, but they'd also do precious metals, and they'd store them in the temples because the temples were considered the most secure places. These temples, with their trustworthy scribes, their secure vaults, essentially acted as the first banks. They provided safekeeping, and they even offered loans of grain. Isn't that funny, right? As societies evolved and trade started to pick up, so did the need for more sophisticated and organized ways to manage wealth, whether it was money or grain. Fast forward to the medieval period in Italy. So here you've got powerful merchant families like the Medici and Florence, and they weren't just traders. They were true pioneers of modern banking practices. They developed concepts like double entry bookkeeping, letters of credit, which allowed, merchants, people to travel without carrying the large sums of gold. They tried that a few times and wasn't working out. And sophisticated lending operations. These are the innovations that laid the groundwork for formal banking systems that we recognize today. Here in the United States, of course, the history of banking has really been nothing short of a roller coaster, right? So here's what I mean by that. We've seen incredible periods, sometimes chaotic periods of growth. Hundreds of small banks issuing their own currencies, lending to financial panics and instability. You got to think of like wildcat banking era of the 19th century. If you're not familiar with that, maybe put that in the comments, I'll make you a video. But it was a time where banking was far more unregulated, and it was really actually pretty risky. And this eventually led to the urgent need for more regulation, more centralization, which culminated in the establishment of the Federal Reserve System in 1913. The Fed, as we all call it, was created to provide a stable central authority to manage the nation's money supply. So it was also there to act as a lender of last resort to prevent widespread bank failures and more during crises, right? Understanding this rich and sometimes crazy history gives you a much deeper appreciation for the profound role that banks play in our complex economy, and perhaps more importantly, in our individual financial lives. They're actually not just random institutions on the corner. They are literally custodians of a significant portion of our financial well-being. And choosing the right one is a decision that actually deserves way more thought and careful consideration than many people give it. So, with all that historical context in mind, let's bring it right up to present day, today, and you. What kind of banks are actually out there right now, serving millions of people? And what are some of the key differences that you've just got to be aware of? You've generally got a few main categories, and each kind of have its own set of characteristics and advantages and disadvantages. And I think understanding these distinctions is the first step in making an informed choice. So first, let's talk about your traditional brick and mortar banks. These are the big names that you see on every street corner. I won't name them all now, but you know what I'm talking about. I'm talking about the national chains, the regional banks. They're characterized by a humongous network of physical branches where you can literally walk into the bank, where you can talk to someone face to face, a teller, where you can use an ATM, where you can sit down with a loan officer. One of the biggest and most obvious benefits here is the personal touch and the immediate access to in-person assistance. I know we're moving toward AI now, but a lot of people still like in-person and face-to-face assistance. If you're a person that works a job that frequently deposits cash or checks, I'm sure you appreciate having a physical location for your transactions or to resolve your issues. Or if you just value security, familiarity, knowing there's a local branch you can visit, a traditional bank obviously is a very appealing option. Normally, traditional banks often offer a wide variety of services also. You can do checking accounts, savings accounts, obviously. You can do mortgages, you can do business loans, you can get investment advice, and you can get it all under one roof. However, I think it's important to acknowledge some of the potential downsides of traditional banks. Traditional banks face significant overhead from maintaining thousands of physical branches. You also have to pay staff. You also have to manage your infrastructure, which can lead to way higher fees for certain services. For instance, a monthly maintenance fee for a checking account might apply unless you meet some sort of like minimum specific balance or something, right? There could also be fees if you use ATMs that are not your bank's ATMs. Your interest rates on savings accounts are normally just a little bit less competitive compared to some of the different, newer, leaner market players, right, the new banks. Furthermore, traditional banks have invested a lot of times really heavily in technology. So their online services and their mobile banking, your app on your phone, their interfaces, right, the apps, they work really well normally. They're functional. Sometimes, depending on how old your bank is, it can really feel sometimes less intuitive or cutting edge compared to the next category, which is the online only banks, right? So the online only banks are a rapidly growing category. These institutions operate entirely digital, no physical branch locations whatsoever. They've actually exploded in popularity in recent years, and it's for very good and compelling reasons. I've got both a physical bank and an online one, honestly. Because they don't have massive overhead costs, they don't have to maintain a large network of physical branches, they often pass the savings directly to their customers. So this means that they typically offer higher interest rates on savings accounts, sometimes literally 10 or 20 times higher than a traditional bank. Now again, that's not saying much if a traditional bank's like 0.004% on their savings account. But again, 10 or 20 times that of a traditional bank. Generally, they have lower or even no fees for really common services. And then their online platforms and their mobile banking apps are normally incredibly user-friendly. They're incredibly intuitive, and they're packed with a lot of cutting edge features because you've got to pick them over the physical branches, so they got to make sure their stuff works right. So it makes it pretty convenient to manage your finances anywhere, anytime, palm of your hand, right? For those who are comfortable doing that, or even comfortable exclusively doing it digitally, they prioritize maximizing interest earnings. An online bank is probably an absolutely fantastic choice for you. Of course, the primary trade-off with an online bank is precisely what makes them cost-effective: the lack of physical branches and in-person support. So they typically will tell you they've got 24/7 customer service on the phone, on the email, on the chat. But some people just really still prefer the tangible experience of walking into a branch and talking with a real person, right? Or if you work a job where you deal in cash, a lot of times online and digital only banks just will not work for you. I know that's happened to me sometimes, or getting cash, I should say, wanting to deposit it in the bank and realizing I don't have a branch location. I'm not doing that. I'm just keeping this cash, right? So for these specific needs, you have to figure out workarounds. You've got to use partner ATMs for deposits or something like that, right? Third-party services. Finally, another important type of financial institution to consider is a credit union. Credit unions occupy a very unique space in the banking world. So unlike banks, which are for-profit corporations owned by shareholders, credit unions are not for profit. This means they're actually owned by the members. If you decide to join the credit union, you're a part owner. If you've been on our channel before, you know that we love being a part owner. of things. So the very people who bank with them are the owners, no shareholders. Because they don't have shareholders to generate profits for, their operational focus is inherently on providing the best possible value to the members. This often translates into better rates on loans, better rates on mortgages and car loans, generally higher interest on savings accounts, typically lower or no fees for like various services on traditional like checking and savings accounts. They often even have a way more personal community focused feel, and many members report a way higher level of customer service and satisfaction. The main aspect that differentiates credit unions is that you usually need to meet a specific membership requirement to join. So this could mean living, working, attending school in a particular area, belonging to a specific like employer group or specific professional association, or sometimes even like a religious organization. That'll get you into credit union. These requirements are normally pretty broad. So if you don't find one that's we'll let you in based on their requirement, maybe look for another, right? Also, while many credit unions have invested significantly in technology, the range of services for sophistication on their digital platforms might be slightly less extensive, less cutting edge compared to like some of the big guys, right? Because they've got all the money. However, for many, the benefits of member ownership and lower costs far outweigh like, does the app let you do this, that, and the third, right? So you got to make the choice what actually matters to you. So how do you navigate these options and choose the absolute best bank for you? Well, as you can probably tell by now, it truly comes down to understanding and prioritizing your individual needs and preferences. There's no single best bank for everybody. The choice is actually super personal, right? So you got to think about these questions. What are my banking priorities? Do I need physical branches for cash transactions? How frequently do I use ATMs? Am I concerned about fees? How important are interest rates to you? High interest rates on savings, low interest rates on the other things, right? What's my comfort level with doing everything on my phone or the internet? Do I prefer face-to-face? Do I like community feel? You got to just start asking yourself those critical questions. You've got to think specifically about your typical banking activities, like how you usually interact with your money. Do you need physical checks, paper checks? Do you regularly access safety deposit boxes, notary services? How often do you need to talk to a mortgage lender? You know, that sort of thing. It's common needs. But if it's not common for you, then maybe check out one of the other options. But if it is common for you, it'll probably dictate your decision on where you should do your banking. On the other hand, right, there's the vast majority of finances online and through the phone these days. That's where the world's moving. And so for those people who work more like that, then maybe an online bank makes the most sense. However, once you've identified your priorities, the next step is to do your research. Don't just pick the first bank you see or the ones your parents used, right? Take time to compare specific fee structures on different banks. Look closely at their interest rates on savings and checkings accounts. Remember, a small difference can really make a difference over time, right? It'll compound over time. It can add up significantly. So even read customer reviews, right? Go on the websites and read the reviews or Google it. And lastly, I'd say don't be afraid to shop around. Actively see what institutions offer, what makes them different. It's your money. You deserve the best partner for it. Now, I want to briefly introduce you to a concept that we discuss in a bunch of detail on this channel and in much greater depth in our full Save and Spend System presentation. But it's a strategy that moves beyond the conventional thinking of using external banks for your needs. It's this actual, real, powerful idea of becoming your own banker. It's a more advanced, but it's really empowering strategy that involves using unique, sometimes misunderstood, benefits of properly structured whole life insurance. Yeah, whole life insurance to manage and grow your wealth in a fundamentally different and more efficient way than relying on traditional banking institutions. At its core, becoming your own banker is about creating your own private reserve of capital. This reserve, built within your whole life policy, offers a unique combination of benefits that you just won't find in traditional bank accounts or even investment vehicles. It provides a secure place for liquid assets, money, guaranteed growth. Banks do not provide that, and is often tax advantaged. And perhaps more crucially, the ability to access your own money through policy loans without needing to qualify, without having to get credit checks, without having to pay interest back to that third-party bank. And I think it really just puts you in the driver's seat. It allows you to self-finance major purchases, invest in your opportunities, weather your emergencies, your financial storms, without using your own capital and on your own terms. So I think in this video, I won't dive into all the intricate details of using the strategy, but that's why you can click the link in our description or the link to the video that probably popped up on the screen, and you can watch all about it if you're interested. I think it's a concept that's worth exploring if you're serious about gaining more control, if you're serious about efficiency or flexibility in your financial life. It's about shifting the power dynamic and ensuring that your money is truly working for you, rather than you constantly working for your money. Ultimately, selecting the best bank for your needs is really just a deeply personal decision. There's no universal right answer. Sorry. The ideal banking partner for you is one that aligns most effectively with your individual financial goals, complements your lifestyle, and fits comfortably within your personal comfort level regarding technology and in-person interaction. So my strongest advice for you is this: take your time, invest the effort, consider your options, weigh your pros, your cons, make a list, different types of banks, credit unions. But here's what I think: choose a financial partner that genuinely supports you on your journey. Don't choose one that just can hold your money because it's close to you. That's not a proximity, shouldn't be in the equation. Your financial future deserves that level of intentionality. In fact, I recently even put out a video on 5 different types of kind of weird savings accounts you probably hadn't heard of. So, what are your thoughts after watching this? What kind of banking experiences are you looking for actually? Like, what are your biggest priorities? I would genuinely love to hear from you. So, share your insights, put your questions if you have them in the comment section, and I'll make sure that I go through it and I'll answer them for you. If you're ready to take a much deeper dive into optimizing your financial strategy, including even what I talked about earlier, like becoming your own banker, so truly building a financial system that consistently serves your deepest needs, your deepest aspirations, I would actually recommend you to just jump down into our description and click the link there. You can book your free, no obligation call with our team. On that call, we're going to show you and promise you that we can show you how you can guarantee cash flow for the rest of your whole life. It's really cool. So there's a direct link down in the description if you're interested in that. I can help you be really specific on your goals. I can help you understand where you are currently, maybe even map out a personal plan forward so you can really achieve financial independence. Thanks for watching this video, and I'll look forward to seeing you in the next one.
Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.